Welcome to 30 Minutes with Averti Professional Managers webinar series. Our topic today is by our Buki Orekoya.
We're here to discuss a very important topic for SMEs, which is internal control system. A question I often get asked, or a request that is usually put across to me, is to help to source a honest accountant, and I usually smile, because it is assumed that only accountants are supposed to be honest. But you can have both honest or dishonest staff, employees, whether they're accountants or not. What is important is that there should be procedures in place to ensure that even if a staff tends to be dishonest, there are deterrents in place to prevent such an act or to catch such an act when undertaken. So what do we mean by internal control systems? They are the methods and procedures used to ensure the accuracy of financial records. It's so important that for organizations, they have what we call the internal control unit that use the work process in an organization before the external auditor comes in. Unfortunately, small businesses, because of cash issues, usually do not have internal control units, but the owners, the entrepreneur, can actually put in the control measures in place to ensure that things go according to plan. So good internal control maximizes efficiency and minimizes waste, unintentional errors, and fraud. The things to look at when you are looking at internal control system are authorization, recording, safeguarding, reconciliation, and valuation. The first three, being authorization, recording, and safeguarding, are to prevent the errors and the fraud, while the last two, reconciliation and valuation, are to ensure they are caught after they have been committed. So what is authorization? It ensures that transactions are done in accordance with the laid down procedures of management. Why is that important? The owner of the business or the official needs to sign to show that they have approved a particular procedure, because the best of human beings can't forget. I'll give an example. I had a client who had an accountant and so much trusted the accountant and requires the accountant to sometimes bring in money, cash. The owner of the business is entitled to withdraw cash at will whenever they want to. The only mistake this gentleman made was in not signing the required vouchers. So what happened? The owner withdraws cash. The accountant also was busy in withdrawing cash, knowing there won't be any trace. When we came in and we saw how much, by that time it had run into millions, and the owner knew he had not authorized such. The accountant said, well, he never signed, and so each time he asked, he gave. Luckily, with time, the accountant actually confessed, but by that time the money was gone and the owner couldn't get it back. And so it's very, very important that authorization is documented before events are executed. The second one is recording. And this control ensures that all authorized transactions are recorded correctly, the right amounts, the right period, and posted into the right accounts. This ensures that fictitious transactions are not recorded. Recording is very, very important for financial system, and recording without accuracy is a waste of time. And so recording controls are very important. Safeguarding controls ensure that precautions and procedures restrict access to assets. Which of the important assets should we be looking at? Obviously, somebody cannot have free access to your bank accounts. Somebody should not have free access to your cash. If you have a store, somebody should not have free access to your store without at least controls of maybe having to fill particular forms and having authorization before that is done. The first one is reconciliation. Records are compared with other independently kept records and physical counts. At the end of each month, for example, the bank will send their bank statements, and it is the duty of the accountant to compare what he has recorded as the transactions for the month with what the bank has in the bank statement. Anybody can make mistakes, and sometimes also bank make mistakes, and the reconciliation throws off such mistakes so that they can be corrected as early as possible. The correction for the accountant can be immediately done. The one for the bank can easily be notified to the bank, and they do the required correction. Another sort of reconciliation that is required are stock reconciliation. You have your bin cards and you have your stock ledgers. Both records must be equal, and so every month there should be a reconciliation between your ledger and your bin cards to ensure accuracy. A third one for stock is that when physical counts are done, then it can be reconciled with the actual records to ensure that the stock in the physical stock in store and that recorded in the books are the same. The last one is valuation, and it ensures that recorded amounts are periodically reviewed for impairments of values and necessary write-down. What comes readily to mind here are debtors, creditors. Sometimes somebody owes you money and it's been in the books for so long. There has to be regular periods where you review your debtors to see whether they are still collectible. Due to various reasons, somebody may legally owe you, but the person is now in a position not to pay. And instead of carrying fictitious assets in the books, it's necessary to actually write off amounts that are not recoverable. So what do we do under internal control system? There are some things that have to be in place for the internal control system to work. One is reliable personnel with clear responsibilities. In many organizations, in many big organizations, people do have their responsibilities laid out for them. But sometimes in small organizations, the owner tends to just send whoever is available to do some particular transaction or particular work function. This will not work for internal control system because you need clear responsibilities. The second one is separation of duties. And under separation of duties, there has to be a clear separation of the duty of keeping records and keeping assets. For example, the person who is keeping the petty cash, for example, should not be the one posting to the ledger. And so, if somebody is keeping the actual assets and keeping the books, to doctor the books become easier. I always tell SMEs, even when you are not able to employ more than an accountant, you can actually have maybe the secretary or an admin staff keep the petty cash while the accountant actually posts the ledger. And then you can have reconciliation between what is done by the non-accountants who usually will keep records using Excel, and the accountant who posts into the ledger. The third thing that needs to be done is proper authorization. I had talked about authorization before. It shows that it's actually very, very important. Then you have adequate documents. Documentation is very, very important for accounting, and proper procedures should be in place stating the documents that have to be kept so that things are recorded as at when due. And another issue we need to take note for adequate documents is that there must be supporting documents for every transaction. Unless they are off, they are market transaction, your staff must ensure that every transaction has supporting documents. That obviously confirms the valuation of transactions, and you have proof that particular transactions actually occurred in the amount that is stated. Then we have proper procedures. Things must be done in particular order and in particular sequence to get particular results. And so one way auditors normally know when something is wrong in a company is when you have staff who deliberately refuse to follow procedures. When you have a documented internal control system, the procedures are so orchestrated in a way that if somebody actually follows the procedure, to be fraudulent becomes difficult. And so when people know that procedures will prevent them from doing what they want to do, what they do is they boycott it. And so that's supposed to be a pointer to any entrepreneur. When you have a staff that deliberately flouts procedures, look at that person very well and be sure the person is not being fraudulent. Then you have physical safeguards. What do you mean by physical safeguards? There must be ways of limiting access to the assets of the company. For example, if you have a store, there must be a lock to the store, and the key to the store must be in designated hands. Your store warehousing valuables should not be open to anybody to enter. If just anybody can enter your store, when you have missing things, who do you hold accountable for such missing items? And that takes us back to the issue of reliable personnel with clear responsibilities. If you have a storekeeper, then you should actually stop sending other people to the store in the absence of the store keeper. A very important one, which many entrepreneurs neglect to follow, is vacation and rotation of duties. For SMEs, you already have limited staff numbers. And so even when your staff actually wants to go on leave, we're always appealing to them not to go. But why must staff always go on vacation? Definitely, if somebody has worked for a year, they should actually have time off to go and relax and recharge. But apart from that, vacation time is a time to ensure that you check whatever that person has been doing when working. If somebody else takes off the duties of somebody who has gone on leave, there is the possibility of uncovering whatever that person has been doing wrong. I'll give an example. We got a new client, and the accountant hadn't been on vacation for maybe about 7 years. And the first thing I recommended was that he must proceed on leave. A lot of reasons were given to me for not going on leave, but I got somebody to sit in while he proceeded on leave. The very first day of his vacation, the diesel man came to deliver diesel. He came, looked for the accountant, he was nowhere to be found, greeted the person there, went. He did that about 3 times, and the accountant had to ask, what's the problem? He said, well, he's delivered the diesel. He said, okay, so bring in your papers. The man looked confused. Said, bring your papers. He was now asking the new accountant, what do I write there? That is the accountant that tells him what to write. I mean, obviously, we know what has been happening. It's a different thing he writes in the invoice compared to what he actually supplies. And that was how that particular transaction was revealed. And so vacation is a must for all staff. The last one we're going to talk about under the checklist of internal control system is independent checks. There must be ways of independently checking the records that have been recorded. Many accounts have control accounts. Like for example, if you are posting your receivables, there is a control for receivables. By the time you finish posting your receivables, you must be able to check that the total agrees with what you have in the ledger. The same thing happens with your payables and your vendors. The sum total of what the vendors owe must agree with the control payable accounts. At the end of the year, the auditors will normally circularize your banks to get an independent check on the amount that is in the ledger. Independent checks are very, very essential controls to have in place in an organization. Yes, you can say you have some of these things, and yet one way or the other, some things still get done behind you. So in conclusion, no framework of internal control system can prevent somebody who is bent on committing fraud from doing that, or from beating whatever controls you have in place. The internal control system is supposed to be a cost control measure to ensure that somebody who may want to control fraud is prevented from doing that, or to ensure that even somebody who is honest is not tempted unusually. Sometimes entrepreneurs unknowingly put temptation in front of their honest staff by overtrusting, by not putting controls in place. I hope with this short webinar, we know what internal control measures are, and we can start instituting such to ensure that we achieve efficient operations and reduce temptation in our organization. Wishing you the best of luck. Thank you.